Interesting market action here on a Monday. I'm Marlon Bowling with you, your tour guide to the ag commodities. I am joined by the one and only, thank goodness some people would say, Todd Bubba Horwitz of BubbaTrading.com, and he's based in Chicago. Todd, always a pleasure to get to talk with you. I don't get to talk with you much here lately, and glad to have you on board. How are you? Might have a little bit of an audio connection problem there. Tell you what, we'll try and get that straightened out. Todd, I'm going to dive into some prices here, if you can hear me, and then we'll try and get that audio connection reestablished. So let's take a look at our current market action in the grains. It has been a downward pressure day all day long. We currently have the March contract on the corn down 5 1/4 at 5.84 3/4. Now we had the corn market selling off on the open. It tried to rally back. It came back, 3 or 4 cents or so. And now I see we're in about the last, I'll call it about 15 minutes of trade. It got up there about as high as 587-ish, and then it turned around and fell back again. So it's a little bit of a whipsaw day in the corn. General bearishness, though, across that complex. Now, if you look at the soybean trade with our quotes provided by Bar Chart, a lot of pressure here in soybeans today, especially. You have January now down 19 1/4 cents. We're at 12.48 1/2, and you know that's only 1 penny from our low of the day. Look at where we had the high overnight, 12.71. We have fallen a long ways, about 23 cents off of that overnight high. And the March soybeans currently down 19 cents on the day. We're now trading at 12.55 1/4 and about 22 cents off of its overnight high. You know, we're within about a penny of our low. So very bearish technical action taking place in the soybean trade here right now. Now let's look at the soy products. On soybean meal today, we now have the January contract down by $4.20 at 362.60 on the soybean oil market. Here you have that January contract down 10 points. We're at 53.59 per hundredweight. However, interesting in the wheat, where we had a lot of early pressure, and look at it now. March Chicago wheat, 8.5 cents higher at 7.93 3/4. That's only 1 tick from our high of the day. In the hard red wheat, we have March 9.5 higher at 8.15, only 2 ticks from its high of the day. And in Minneapolis spring wheat, March is now 2 1/4 lower at 10.19 1/2. That'd be about a penny and a half from our high of the day at this point. So let's try Todd once again. I think we have him on the phone here. Todd Bubba Horwitz of BubbaTrading.com in Chicago. This wheat market kind of impressive in the way that it sold off in the beginning, but has really based out in a big way.
Yeah, but remember, Marlon, it's been under so much pressure recently that, I mean, it's nice to see it rallying, but we've been under dramatic pressure for the last few weeks. And, I mean, I'd like to see it pop, but remember, we've come down. We were 863 at the top. We're 793. So you're going to get some rallies out of that. So I'm not impressed. To me, we have to get back over $8 and hold, and then I think we can go a lot higher. But that first key benchmark is going to be $8.
Where are we in your technical perspective when you look at the corn market right now? I mean, is there more downside risk or very much of it right now?
Well, just like technology and me not being able to talk, there's always downside risk. But basically, we had some resistance on Friday, and I would suspect that 580 should be pretty solid support. And we really look really good from a technical standpoint. I mean, the trend is higher. The natural pullback is here. But the difference in conversely between this and wheat is this chart looks great and wheat not so much.
Okay, we'll come back in a moment and we'll take a look at this livestock trade. And we have some new cutout information that just came out. I'll share that with you next. We're back with Todd Bubba Horwitz of BubbaTrading.com in Chicago. Quick question for you, Todd. When you look at what's going on in the Dow today, we're down pretty significantly there. I know percentage-wise not that big of a move, but does that tell you that we could have some rough waters ahead here in the next couple of weeks?
It's always hard to say, Marlon, this time of year because it is the holiday season and typically markets tend to rally. We do have a Fed meeting on Wednesday, which will probably raise interest rates, which will be some headwinds for the markets. And certainly, as we saw in December of 2018, we can have some major selling. There's some pressure here, but we're still very much closer to the highs than reversing out and changing. So I think that this is more of a sell-off and maybe a little bit of fear coming into what they're going to do with these interest rates exactly. I mean, the interesting is the dramatic turnaround was we were much higher overnight. Now we're much lower.
Let's look at live cattle right now and on our current prices and our quotes provided by Bar Chart. We're higher. February up 75 at 138.82, and we're back within about 45 cents of our high of the day now on the feeder cattle market. And I'll remind you, these markets have been really choppy today. March feeders now 90 cents higher at 166.20. On the lean hog market, remember the big gains we had on Friday, over $3 higher on February? Well, now we're down 45 cents at 80.57. So all kinds of choppiness going on in livestock, but overall, it looks like the cattle market so far today, Todd, they're hanging right in there.
Marlon, I got to tell you something. It was the fats especially have been very impressive. They were down about $1.20 last I looked, and all of a sudden they're now higher. So I think that's what you see, the difference in markets that are strong versus weak. When they're strong, they have lower openings and they start to rally later, and when they're weaker, they usually start higher and work their way lower. And I think that, that's a very impressive action in the cattle markets in general. And hogs, listen, they're going to take a rest. You have a couple of big up moves and turn the trend to the upside, and you expect a little bit of pullback. So I think they look pretty good. And I think the whole complex looks fairly solid depending on, what happens with the supply chain issue and interest rates, because these interest rates are going to harm farmers dramatically as well, because they already overpay. They pay up to begin with, and now it's going to be more. So there's some problematic things out there, but I think we'll be in good shape.
All righty. Well, right now we have the lean hogs that February still down 45 cents right now. And I wanted to point out the U.S. dollar December futures up 185 points at 96.285. Todd, thanks for the information today. Appreciate it. Todd Bubba Horwitz at BubbaTrading.com. Christina, it's all yours.